So let's get to David Knibbe, who's the CEO of NN Group. We've done enough pontificating. David, really nice to see you. I hear that you've had a couple of sound issues coming in, so I hope you can hear me loud and clear now as well. How do you see the industry here and now? Because, of course, it's been through a very traumatic event over the last 12 months, like all of us.
Yes, of course. Good morning. Well, clearly 2020 was an unprecedented year, and for customers, for internal people, we all had to migrate home, and obviously a lot of unrest in society. However, I think if you look in general at the insurance industry, and especially at NN, we had a very strong year. Our operating result actually in the second half was 9% up. And what I think is quite remarkable is that also our sales was up 18% in the second half of the year, and that also shows how resilient our sales force is, and that not only our salespeople but also customers are getting more and more used to doing business in a digital way. And well, with all the market volatility, we were pleased to see that also our Solvency II ratio held up very well with 210%. So all in all, it was a strong year despite all the I would say unprecedented challenges that we had in 2020 due to COVID.
David, I know I'm looking at a backward-looking figure and I want to look forward, but the APE figure was down 4.7% from the second half of 2019. I mentioned as well, of course, that in the financial sector, in the banking sector, we have negative rates, which encourages a lot of tourists into all kinds of areas as well. That APE figure, where's it going next? Are you disappointed with it? And is because of the easy money going around, is it hard to increase premiums?
Well, we tend to look at more at value new business than APE. APE is very much also a volume number. We actually steer the company on what we call value new business, which of course it talks about a lot more the value that is created by the sales. And that number was up 18% in the second half of 2020. Very much driven by Europe, which I think is remarkable given all the lockdowns that we've seen, but also because of Japan that had traditionally after the tax reform a low number after the tax reform, but that has really rebounded. So all in all, I'm actually very pleased with the sales progress given the 18% increase. And by the way, not only on insurance, because also the bank had a record year. We did 8 billion of new mortgages in 2020. And the asset manager, who actually had in the second half of 2020 a 10 billion net inflow of third-party business. So all in all, I think for a year like this, it's a very strong commercial result.
David, I was mentioning your activist investor, Elliot, that has been calling for changes, and one of them was around the cost-cutting target, wanting an explicit target to be set. I can see you've extracted another 23 million from the second half of the year. It feels more piecemeal, the approach at this point. What is the overall target as you're trying to reduce costs in the business?
Right, so after the takeover of Delta Lloyd, we set a target of initially 350 million of cost savings, which we later on increased to 400 million. And I'm very pleased to see that we achieved the 400 million at the end of 2020. So that target is now behind us. It also puts us very much in line in terms of efficiency with our European peers. But we don't stop there. We now have additional targets per segment. So, for example, the non-life company now has an expense target of getting the expense ratio below 10%, but also the life company needs to reduce their cost in line with the runoff of the portfolio, which is around 4% per year. Every year in absolute terms, or for example, the bank that has targeted a cost-income ratio of 55%. So all the individual segments continue to drive efficiency, while at the same time we're also investing, of course, in our customer engagement and data analytics.
Speaking of investing, there's been a dramatic look at where the investments have gone in recent years, and there was a pledge to try and look at moving some of the assets away from low-yielding government bonds to other more risky areas of the market, from Dutch mortgages to equities, corporate debt. How is that transition taking place in this current type of market that we're witnessing?
Yes, it was a remarkable year. In the first half of 2020, We invested a lot in corporate bonds, around 2.7 billion and around 700 million in public equity. I think we've all seen that since then markets recovered very quickly. Equity markets, but also spreads came in. So I would say in the second half of the year, the focus has been more on loans, indeed on Dutch mortgages that continue to be very attractive, and more illiquid investments like, for example, real estate. So all in all, in total, 8.7 billion was moved into more higher yielding assets, mostly reducing our government bond exposure. And we're very pleased so far with the investments, the way they are performing. At the same time, we continue to focus on maintaining a very strong balance sheet and in a very interest rate resilient way.
Really good to get your views today, sir. Thank you very much indeed. A busy day for you. We do appreciate your time. David Knibbe, who is the CEO of NN Group.